Do we have anybody in room? Do we have
Sharon,
anybody
can you
in
see
room?
Junia is on.
Oh, welcome.
That's exciting. Anybody in rooms? One person in room so far. That's great.
Okay.
Hey, this is a good
Terrific.
turnout for us. This makes me happy. So, okay, so I'm going to introduce Jennifer Hernandez to you guys, and I'm going to let her just roll because she does this all the time. So Jennifer is my mortgage lender of choice. She just helped me and my husband buy our absolute dream home. Thank you. I love it so much.
Yeah.
And she's helped many of my clients, and she's just a rock star. And her brother Kenny works with her, who's another rock star. He's amazing. So we wanted her to get on and share her knowledge. Obviously, the market's shifting. Just let's talk some basic 101 mortgage. And Jennifer, I want you to you roll with it. You know what's happening right now in the market. You do your thing, and I'll put your contact information in the group chat.
Okay.
So you all can all have it, and I can attest she's amazing, and her brother Kenny's amazing. Their whole team is amazing. It's hard for me to stick with one person until I've tried them out, and buying my home was flawless and easy. So
Well, you guys were super
Jennifer.
simple and compliant, and
we were. My husband was on it with
you
his
guys were
paperwork.
easy.
Yes.
Yeah, that's the key. If will you allow me to share screen so I can share a little PowerPoint?
Yeah.
I'll say this before I start. My team and I follow Grant Cardone a lot, and so I signed up. We've been doing for, I don't know, 8 months now, Cardone University, where we have modules every week and we have a coach. And I was like, if we don't do this coach thing, we're never going to watch them. We're not. But right now, the module that we're watching is agreeing with everybody. And I'm like, are you kidding me? Like your husband, your kids. And it's really powerful because, right now, that house is expensive, or that room is too small, or the rates are too high. It's like, yeah, it is. It's really actually a really good module. I'm going to kind of condense it, and I'll make probably a video for realtors. He's like, he goes, before you can make a sale to somebody, you got to agree with them. The sky's purple. You got to just agree that that's what they think. That's their perception. You have to agree with everybody. And it's like hard. He goes, I don't know if anyone follows Grant Cardone, but he's loud and fun. And he's like, I bet y'all can't make it 3 hours with agreeing with everybody. So it's interesting because right now, everything I'm hearing is the rates are too high.
Yeah.
The house is too small. Like the house, the prices are high. That's not really going away. They're kind of going to stabilize and kind of go like this. They might come back a little bit, but the rates, yes, they are high.
Mhm.
So really, I'm really working on that into my script of just really acknowledging people and just agreeing with them, and then showing them the benefit of something. So just a little, I didn't expect to tell that to y'all, but it's on my mind.
That's okay. No, that's
watching
good.
it this morning, but it's super relevant to what we're doing.
Yeah.
And this is a very strange time. I've been doing this for 27 years. And this is definitely the strangest time that I've had in that 27. I've seen a lot of strange times, actually. I've seen many cycles, and this cycle will not last. This cycle we'll cycle out of it. Pretty much my answer to the rates are high. I'm like, yes, they are. Guess what though? In a year to a year and a half, you're going to be calling me to refi, and we're going to make that super easy for you and charge you hardly any lender fees so we can go ahead and get this done for you. So you might as well buy now because the values are going to keep creeping up. Values traditionally always do rise up. So that's why.
And we just bought this house, 4 weeks ago. And we knew we were getting that high interest rate, but we knew, in just because I'm a realtor, obviously, and then in speaking to Kenny and speaking to you, we knew, and we know that we're going to refi.
Yeah.
And the minute they drop, we'll refi, we'll be fine,
Mm-hmm.
And
So,
Jennifer,
yeah.
I want to just say, because I work so many builder deals, that I'm going to tell you, supply cost is not going to go down.
Yeah,
That is not going to go down. And if we don't get our buyers in something and let them see the value that way and work with Jennifer directly so that she can explain what can happen once they refi, that's the
Mhm.
key in working with all these new buyers right now.
And I think that's a really good argument, not an argument, but it's an objection overcoming statement that the rates are going to drop, refi, you know, and you're right with values. I think that's really important to know the values.
Yeah, because there's no way that the values are going to come down. And I've spoken to so many appraisers, Jennifer, that the rates just are not, I mean, the values are not going to plummet simply because of the cost of goods.
So a lot of what we're doing right now is really, I see my role as really maintaining and really subduing their fear, because we got to realize that the news is sensationalizing. Like, they'll put out an article and it says, you know, drastic drop in appreciation, like to make it sound like the world is ending. Well,
Yeah.
drop in appreciation from an unrealistic number. Yeah, 20 to 25% ongoing was an unrealistic, like, this is not California. Like, that's kind of normal over there in the past. Well, we're historically, in Houston anyway, 3 to 4%, you know, if you take an average of the whole city, right? So that, I mean, we've all the homeowners have enjoyed 20 to 25%. So it's starting to plateau and it's starting to come back to more normal, you know, more normal stuff. I mean, 3 to 5% is just normal. So yeah, there's been a drop in appreciation from 25 to 4, but we got to contextualize and really just, that's where I'm really, really big, is education. So that is actually my first slide is just a couple things about me. Scan the QR code, that'll pop my information into your phone. So go ahead and scan. And then, so I've helped a lot of families since 1995. I've seen a lot of cycles. I tell clients that, like, look, y'all, this will pass. I've experienced so many refi booms, y'all, like I think 7 at least. I mean, it just, every few years, it just happens. And there's no rhyme or reason other than the tightening up and the pulling back and the release. I mean, they will want money to flux into the market again. They have to spur economy. Home ownership is always the number one way that the government sees as a way to influx to the economy. So whatever they come up with, a 40-year mortgage, some kind of grant. I remember back during Obama, we had that $8,000 something. I mean, I don't know, but something will happen. So this is just, it's short term, right? So anyway, but I'm very big on education. So please, I'll show you in a minute. Loan with Jen is my YouTube channel. I've got over 350, actually now 360 videos, just all about home buying, so many different topics. So now I was just talking to my video guy this morning, and we're going to start working on little mini classes, you know, like little mini playlists where, hey, I'm going to send you a course on, you know, but I'll do a follow-up email to y'all after this with these slides, and then also a link to some of the more popular, like I have a really good one that's the home buyer process A to Z. And trust me, there's a slide in there on why you need to use a realtor. Trust me, like I'm pimping y'all out all the time. Like I actually got a reel that's going viral on Instagram, not viral, but like 12,000 views on Instagram that's about using a realtor. So I'll, you know what, Kelly, I'll send that to you. And if you send it out to all y'all's, let me write that down.
Yeah, I can do that.
Make sure you all comment and share it, because that's how that's how we got to make it viral, because I need people to know that you got to use a realtor. Like this reel is all about realtors. Okay. All about it. So hang on, reel to Kelly. Perfect. And she'll text it to y'all, and you can, and then when you're there, you can, of course, follow me and all that. But my YouTube channel is my big, huge passion because education is how we need to, I see at this, I mean, I'm kind of in the legacy portion of my career. I don't know if I'm going to be walking around saying, oh yeah, I've been doing this 40 years. Like I'm hoping by then I'm on to something else, but I really don't know. That's just 13 years from now. But for right now, I'm super, super passionate about real facts so that you can make the decision that's best for you. And if that decision is with us, that's great. And if not, listen, it's okay. Like I'm not a fit for everybody. Some people don't like to work with a team. They don't like that they have to deal with Kenny. Well, Kenny is thebomb.com.
Kenny's awesome.
He is, but you know what? I actually had a client tell me one time, and the realtor too, we want to deal just with one person. And I was like, well, that's
Okay.
fine. But when you deal with one person, you're also dealing with one person's schedule.
Yeah.
And one person that has to, like, heaven forbid, I have to leave early for my kid's football game like I did yesterday, but my phone was ringing and Kenny and Gigi were answering it.
Yep.
So the beauty of having a small team, you know, they're small. I mean, I don't have a gazillion people working for me. I have 6, but they do different things. But the clients deal with 1 or 2 other people. And the beauty of that is that the clients get helped on their time, not my time, you know? So, but the point is, I want to get clients good information so that they can make whatever decision, enable them with, because these days you go to Google, y'all, the first 10 pages are ads and like, clients do not know what to click. So we're in an age of over information. And so I really see my channel as like, hey, everything lending related, please use it as a resource. So I'll make sure that y'all have that link as well. So what I've prepared, you know, no matter how many years you've been in the business, this is all just kind of just some talking points for you of what really behind the scenes on approval, to just help y'all get people to a lending expert as soon as possible. Because I know y'all hear objections before we even do, if they happen to get to the realtor first. No cost to pre-approve. If a company's charging them to pre-approve, they need to get definitely a different opinion, because I mean,
Yeah.
you know, I don't think anyone's out there charging for it, but just in case. Multiple checks into credit will not harm their credit. It will not. It's all the other stuff that they do that harms their credit, like get a new credit card, 20% discount at Target this weekend if I open credit, you know, all these other things at the same time, delinquencies, a collection, those kind of things harm their credit. But one little pull, y'all, it is not going to make the difference between approval.
I think that's really good to know. And I think that's really good to say to your buyers, because a lot of people are like, oh my God, I don't want to pull in my credit.
No, they have no clue.
And I'm sure everybody on this call has heard that before from a buyer.
Yeah, I have a slide after this that's the truth about credit inquiries. So I'll go over that in a sec, but you're right. I mean, it's the biggest objection that we get, the biggest one, why they're not pre-approving. But multiple checks will not harm their credit. Applying with a lender does not bind them to that lender. That's another reason why people don't apply, because they say, oh, if I apply, I'm going to have to stick with that lender. And, you know, people are scared to make the wrong choice. They're scared to get screwed. They are.
Right.
And so they do things out of looking out for themselves. So I get it, but they need to understand they're not bound. I mean, I tell people that if I have the opportunity, I'm just like, hey, you know, you referred to me by Kelly. She just refers us because she knows that we do a great job and that we're going to give you the best information so you can make the right choice for you. And by the way, there's no cost to what I do. The only thing it's going to cost you is time to get things together. And so the approximate turn time of pre-approval is 1 to 2 days after they get us documents. So the key, and I know that y'all know this, but I'm just going to say it, the key to accuracy and all those things that follow is paperwork. So if you hear them say, oh yeah, I got this, you know, letter, it was so quick, I just did this online thing. I mean, obviously y'all know that we need to run for the hills, because that does not mean that they've been pre-approved. But that's a great time to interject and say, agree, remember, Grant Cardone, agree with everybody. Oh, yes, yeah, it sounds like it. Okay. May I suggest that you get a second opinion? A human being looking at your documents is probably the smartest move that you can make. Like, someone, if they're complaining to you about the questions and the Inquisition, like, this is like the Inquisition over here. They're asking me all these questions. You need to say, good.
Yeah.
That is amazing, because that's like the best compliment that I've ever gotten. Like, oh, Chase didn't ask me for all these things. I'm like, well, that's actually why Kelly referred you to me, because I don't make mistakes with your money at risk. I'm not going to let you I take so seriously you putting earnest money down on a property and not losing it, that I'm asking you all these hard questions that most lenders wait until the week before to ask you.
Yep.
So would you rather answer them now and make sure we're in the right place, or would you rather answer them way into the process when you think that it's a done deal?
Let me tell
And
you
then
all
they're like,
let me
oh, okay.
let me tell you a really quick story, and this just happened to my brother. Didn't ask me. Got with a lender. I don't even know the whole story. All I know is that at the end of the day, he ended up losing $33,000 in earnest
Oh
money.
my God.
He lost the earnest money.
He lost the earnest money because and again, I didn't want to hammer him too hard because I was irritated that he didn't ask me for a referral. But apparently whoever he talked to was like, oh yeah, you're good. You're golden. No problem. Da, da, da. The over the phone thing. And so they got under contract with a very, very, very expensive new construction home in Galveston, and found out, after all was said and done, that they had to sell their home in order to buy this home. They didn't know that up front. They didn't know certain things. And so he lost $33,000, just like
I
that.
think if y'all could just work into your script and prep the buyers, like, hey, when you get with the lender, if they're asking you a ton of questions, that's actually a really good sign.
Yeah.
So if it seems too easy, you need to let me know.
Yeah.
Because it needs to be a little bit painful. It really
I didn't want to throw salt into my brother's wound by going, you screwed up big time.
Well,
The
that's
lender
really
screwed
too
him up.
bad.
Yeah.
But it's just, but if y'all can, because and I think that it's just a good script to have of preparing them about the credit. Lots of questions is a great thing. And if it starts to take more than a couple of days for pre-approval, usually it's because we're waiting on something. Like, I've got a guy, we were on our meeting this morning, and I'm like, God, we've had Christopher stuff for, like, why is he not, and it's because we're waiting on some things
Right.
from him. So, but just letting the realtor know. But normally 1 to 2 days, like, once we get all the docs we need, it's like a day. I mean, it's not, the letters are good technically for 90 days. And that's because things get stale and we have to put something on the letter. Otherwise it'd be the Wild West and people would be using a letter from a year ago.
Yep.
But we do. And that's another reason, y'all, that clients don't pre-approve. Well, y'all are going to check my credit, and then I might not be buying for 5 or 6 months. And then you're going to have to check it again, which is true. What I say to that is, yes, that's true. However, I'm going to give you free credit advice on what to keep, start, and stop doing, so that when we do have to pull it in 5 months, it's a mute event.
Yep.
It's a neutral event. And you probably, now again, y'all, I'm just one lender. Okay. But hopefully lenders are doing that, but I'm really good with credit. I give people free unsolicited advice on their credit every time. I'm like, hey, you didn't ask me, but I'm going to go ahead and tell you, keep doing these things and you're going to be just fine. So when someone is in the 760 plus, in fact, let's go to the credit slide right now.
I was gonna say, what's the minimum credit right now?
Well, the minimum credit, depending
get
on,
approved?
I do actually have that on a different slide in a sec,
Okay.
so I will answer that.
Okay.
But about credit, this is important to just kind of some talking points to know. We do use the middle of the 3 scores. Clients are like, oh, what score do you use? Well, we use all 3, and it's the middle, not the average, but the middle of the 3. And the lower of the 2 is used for interest rate pricing purposes. So a lot of people don't understand that, and they think, oh, my credit's crappy, but my husband is 800, so we should be fine. Well, no. And if I ever see someone and one spouse is harming the equation and their credit isn't needed, I talk to them about, because, you know, some people are just really adamant on both being on the loan together for what, you know, whatever reason. So I educate them and say, hey, you're married, you're going to be on title anyway, you just won't be on the loan. And this is how much better interest rate y'all are going to get. Let me just show you the numbers and y'all can make the decision. I mean, I've had some borrowers where they decide to pay 1/4% more because they want to be on the loan together, and I let them decide, but I at least give them the option. So the lower of the 2 borrowers is used. And then the credit score range is anywhere from 350 to 850. I'll be honest, I've never seen anything below like 450 because it's usually so crappy that it doesn't even score. It just shows up as no score. But they really need in the 600s, I'll be honest with you, for FHA, and then higher for conventional, but I'll go through that in just a second. But the very highest score is 850. Now, not sure if y'all know this, but there's 25 models of credit and all lenders use the same one. And a lot of people don't, you know, everyone has Credit Karma, y'all. Everyone, Credit Karma, CreditWise. Oh, I go directly to Experian, so this is my score. I go to, you know, they have an Experian account. Unfortunately, even Experian themselves has a different credit score than what lenders pull. So think of the credit scoring system as a filter. So there's 25 filters. And so lenders have a filter that is designed to analyze the information that's going to most likely tell us the likelihood of them paying on time in the next 2 years. That's the bottom line.
That's
Those
interesting.
other-
I did not know that. That is very interesting.
Yeah, it's in one of my videos.
Hey.
Yeah, hey. So that I send every borrower, by the way. Hopefully they watch it, you know, but so yeah, it's super interesting. Like, I wish that there was one score. I really do, but there's not. And think of it this way, like all this free, I'm sure all of y'all's banks say, oh yeah, click here to get your credit score. They're giving you this free service, right? It's kind of like there's free services everywhere. Just like, oh yeah, I can just pay a company $500 to list my house, and it's the same as listing it with a realtor. No, that's not true. You know it, right? It's the same thing. If you're getting the credit score for free, it's like the bare bones minimum model filter thing that's like just this generic score. But if like lenders, our score costs Mac Daddy money, like a lot, because we really care about the components of how it's analyzing the score. So basically, when I'm talking to clients, I just educate them, hey, did you know there's over 25 models of credit, and all lenders use the same one. So whether they pull credit with me or Cornerstone or Chase, the Chase mortgage department, okay, not Chase Online, my credit card, okay, there's difference. We all use the same algorithm. That's how we can sell loans between each other, because we're consistent on our analysis. So when Wells Fargo buys loans from us, we sell a lot to Wells and Chase. They know that the integrity of the analysis is good because we're using all the same scoring model.
Yeah.
So
it's like the MLS for us. We all pull. Appraisers all pull from the MLS. We all pull from the MLS.
Yeah.
Okay.
Yeah, same thing. So a lot of people, clients do not know that. It would take them hours of video watching and scrolling to try to dig and find that information. That is the largest myth that I get. And it just brings me value when I can tell people, right? But still, that's what's keeping your borrowers, your buyers from, and your sellers, by the way, because your sellers need to get pre-approved before they sell their house out from under them. They need to pre-approve just as badly. So it's because they're like, oh, we don't know when we're going to sell. We're 9 months out. Why? Well, yeah, we need to make sure that you can get to the house that you want, and that, like, whatever your plans are. So I try to get people to pre-approve 6 months out,
So Jen, let me
because
ask-
at least,
let me ask you a question real quick regarding that. So when I have conversations with my buyers, I have no qualm saying, what does your credit look like? How's your credit look?
yeah,
Because I mean, I don't want to spin my wheels if I don't have to. I have to pre-approve my buyers on my level. You know, are they ready
Yeah.
to go? So if they say, well, my Experian credit score is 700, how close to truth is that? Because I mean, I'm an Experian member. I always check my credit scores.
so my answer will annoy you,
Okay, good.
but it will frustrate you. There is no pattern.
Okay,
It literally depends. Usually it's within a 40-point range,
Okay.
usually up or
That's-
down,
yeah.
by the way.
Okay.
But it's the components of the credit that drive the
Got it.
outcome of the score. Like our model more heavily scores on percent utilization of revolving accounts, lates, and collections.
okay,
Because remember, our score is tweaked to tell us the likelihood that you're going to be late in the next 2 years.
sure. So Experian is
looks-
just a number.
It looks at your last 2-year history to most closely gauge the next 2 years.
Got it.
So
Okay,
if someone has lates in the last year, forget about it. Their score is 100 points down.
Okay. I mean, I'm not going to ever act as a lender because that's not my job and I don't know, but I do ask. you
I
know,
mean,
what-
it's a good gauge. Something in the 700s is somewhere between 650 and 750
okay,
on our.
That's what I
on
was
our
going, that's what
modeling.
I was looking for. Okay. Thank you.
Yeah, and sometimes it's right on because the components are, favorable for our score. So it really is hard. That's why they just need to have some type of a mortgage lender pull their credit so that they know.
Got it. Okay.
So I tell people, I'm like, listen, y'all, 6 months out, even 9 months, do it. It doesn't matter. It's fine for me. I want to give you the education so that y'all are armed with have homework. Like y'all, even the rates, well, the rates are super high right now. So even saving 1/4%, I mean, before when you're at 3.5 versus 3.3 or 2, like who cares? It's free money. Like, what's the big deal? But now being at 7 versus 7.2 is a bigger deal. Okay. And mentally, I mean, they're all going to be refinancing anyway, but it's fine. So giving credit homework, like a 720 is not that great of a score anymore for lenders. It really needs to be above 760. So if you're a 758, let me give you some free credit homework to get over 760. So it's just a slam dunk.
Yeah.
So even getting 2 points into a new tier, because the credit works in tiers of 20, 680, 700, 720, and every tier for us has different interest rate. So it really is important. And then we're sure to identify their max budget, because another thing you probably know this, but online calculators are dead wrong. Evenhar.com. They don't calculate PMI or correctly.
Right.
They don't, and how could they? They've got to make a generality to thousands. There's different PMI. The higher your credit, the PMI is almost for free, y'all. Like, PMI is so cheap for good credit people. And so, they're pulling in taxes as is. Well, we all know that tax values really haven't had a chance to catch up to this
Yeah.
new market yet, really. And what if you're buying from an 80-year-old? Like, if you're buying from an old person or disabled or whatever, their taxes are way lower than reality. Well, that's what the online calculator is pulling in, The online calculator is not calculating, you know, if you're in Harris County, you're pretty much 2.3%, or in Houston, they're doing it, it's based on what's there right now in the calculation, not like, oh, hey, the tax value really is double because you're buying it. This person has had suppressed appraised value because they've lived there for 20 years, but the county's going to figure out when you buy it that you're buying it for 400 and the seller's only paying tax on like 175. I had that happen actually.
Yep.
With
Oh,
somebody.
I've seen that a lot.
And so I'm giving the client the true tax. I'm like, hey, this might not be what we collect at the time of escrow, but trust me, I want to coach you now on your true payment, what it's going to be, because the county will figure out that you bought it for this higher amount. And they will, the first year that you're in that house, there's no 10% cap. All bets are off. So understanding that, that's why local lenders, like, that's why they need to talk to at least one local lender, because these national lenders do not know how our taxes work.
Yep.
And it's very specific to the market. And so online calculators they're just not, they cannot be trusted. And so I've had clients sitting in my office, like literally right there. And I'm like, hey, the payment is this. And he showed me. And he goes, well, why online does it show my payment $400 less? And I was like, let me see that. And I looked, it wasn't doing PMI. The taxes were wrong. And the insurance was wrong.
That's actually, it's good to know. I did not know that. I did
Yeah.
not know that the online calculators were so off.
Yeah. I mean, because they're like, think of all, it's meant
Yeah,
for all these people in
makes
the
sense.
country. Well, insurance rates near the coast are different than Ohio. I
Yeah.
mean, they just are.
Yep.
And so it's just something to keep in mind. And it's another reason for people to point them to an online. And I got a video about that one too, why online calculators are wrong. That one actually gets watched a lot. Anyway, super fun, but those are the objections that your clients have. So the better that you can get, in fact, let me write that down because I'm gonna link all those to y'all. Hang on.
You know, it's funny because we had a conversation a few meetings ago. One of the agents that was on was having some hard time getting buyers off the fence right now with interest rates rising and all that good stuff. And one of the conversations we had, Jennifer, was, I don't care, you know, if they're going to use your preferred lender or not, get them on the phone with your lender. Let your lender have that conversation with that buyer to assure them that now is the time to buy. That's a strategy to overcome that objection. So, I mean, I would do that in a heartbeat. Even if my client was not using you or whoever else, I would say, look,
Yeah.
you know what? I want you to talk to my lender. That is a great strategy to get a buyer off the fence right now because of what the market's done.
So I'm going to send y'all the 4 top objection, like videos that you know, just kind of watch it, get some new scripting. It's going to help you. One is the truth about credit inquiries, why pre-approve 6 months out, why online calculators are wrong, and then why use a local lender.
That's
So
perfect.
I've got all those. So I'll just put them all in a thing and you can just kind of save it in your draft so you can refer, like whenever you have a client, they're like, oh my God, they need that video. I'm also going to send you the one that's the home buyer process A to Z, because that's a good one just generically for your clients that are like, I mean, y'all, a lot of people are so fearful and they're fearful to even start asking because they feel stupid. They do.
Of course.
They're very fearful. And so they just freeze up and don't do anything.
Yeah.
And they're like, oh, well, rates are high anyway. I might as well just wait. And that's what they're thinking.
Yeah.
And then the prices are going to be even farther away from them. The affordability is going to be even farther away. So it's hard. So the conventional, these are the different types of loans, you know, conventional conforming loans, they conform to Fannie Mae, Freddie Mac. The actually I have to change, whoops. I think it's going to be up to it's going to be somewhere between 700 and 715 in 2023. I've heard both numbers, so I'm going to actually change the slide to 700, but the conforming loan amount will go up. It goes up every January and they've already announced like it's gonna go up. We just don't know the official number. And government loans will follow. So the 3 types of government loans, FHA, VA for veterans, and USDA. The FHA loans always follow, so it will go up from 420. We don't know how far up yet. And that's loan amount, y'all. So
Right.
down payment is on top of that. And then we've got a lot. Do y'all run across a lot of veterans? I mean, they're coming more and more as more of them are being released into society.
I don't. I've only done 1 VA loan in my entire career.
Yeah, me too.
Yeah.
Yeah. It's just not.
So
my
they're
style.
they're out there. And they're actually notorious for, they'll use a lot of these national, veteran, Navy Federal Credit Union and all that. So we want to use them. We want to get them locally as well, because they just, again, these national lenders just don't know what they don't know. They don't know that with VA, you can also use down payment assistance for the closing costs, like they put 0 down but VA loans are great loans. But if you ever have a listing or a buyer or whatever, but listing too, I mean, it's misunderstood. VA lenders loans, we got to help our veterans. So the
Let me
appraisal
ask you
process.
this, though. Somebody told me that on a VA loan, there is no, like with an FHA, there's a max. VA, am I reading this right? There's no max on what they can do, right?
It's 100% loan up to the 647,200. They have the same limit as conforming, but they'll go up to 2 million. So anything over the 647,200,
then they have to put money down.
they have to put 25% down, but still, like, if they're a veteran, trust me, it is like the best thing going. Usually, and sometimes if they're putting a lot down, conventional is actually better.
Yeah.
But it really can help a lot of veterans. And the only difference, y'all, really, the appraisal process is a little more stringent.
Yeah.
On like deferred maintenance and stuff like that. I mean, so just no ugly houses. I mean, that's bottom line. I mean, like if the house is in horrible shape or whatever, I mean, even conventional is going to have a hard time with it. There, if there's like rotted wood everywhere and the roof is falling down and there's holes, and I mean, no one's going to like that.
Yeah.
Then USDA is the stuff like in the real outer, like Brookshire and like real outlying areas. And we have to make sure we go to the website and have to make sure it's in a USDA area. Those loans are okay. They're just really hard to qualify for. They're really strict. So it's harder because you just have to be more well qualified. And a lot of people that want the 0 down, they have a lot of debt. And
So do they then just flip to a conventional or conforming?
Yeah, or FHA.
FHA,
FHA is the most lenient. They allow up to 55% debt to income. Like it's the most lenient thing ever.
Yeah.
And then there's the jumbo non-conforming. That's anything over the 647,200, soon to be 700.
I was gonna say that's going to change. Okay.
Yeah, it'll change. The official announcement comes out in November always.
That's good to know.
We'll let you know. And then there's portfolio loans. I mean, there's other types of loans, y'all. There's bank statement loans and there's doctor loans. And so if we ever get an inquiry and if it's a loan that's a little more hybrid like that, I do bank statement. But if I don't do something, I'll say, hey, go here. Or, I try to refer you to wherever.
What is a bank statement loan?
It's where you're self-employed, but you pretty much lie on your taxes is really what that means.
Nice.
It means that if you read between the lines, it means like, hey, use my business bank statements to see all my deposits, because my tax returns, I basically write everything off. That's what that means. Yeah.
Got it.
Essentially.
Yeah.
So there's a lot of loans out there. These are the main differences between FHA and conventional. FHA allows a lot of debt, credit scores down to 600. There's some lenders out there that allow down to 580, 570, but their credit is really bad at that point. They're more lenient. So when someone's had a bankruptcy or foreclosure just a few years ago, that's where they would go FHA.
Okay.
The appraisal, just the one thing to know, especially if you're the listing agent, if you have an FHA appraisal on that property and that buyer doesn't buy it, and you go to the next buyer and they're doing an FHA loan, that value, it sticks with the property for 120 days. So FHA to FHA, like if the FHA buyer falls out, so like, let's say the appraisal comes in short and your seller's like, I'm not negotiating, I'm sticking to this price. It's like, hey, and it's a 250 house or 300 house. It's, FHA heavy, right? It's like, we try to really educate and convince, not convince, but try to be like, hey, are you sure you don't want to accept it? Because it's going to stick with you for 120 days. Any future, you're like limiting your number of buyers to conventional only.
So if another FHA buyer comes in 60 days, that appraisal's still there, it sticks.
Yes, because it all goes by the case number. FHA loans have a case number and it's in the FHA system, so that like sometimes I've had a buyer at FHA and they buy, let's say you're listing on ABC Street, and we go to pull the case number and it says, this property already has a case number
I did
and an
not
appraisal
know
was
that.
done.
That is very good to know.
Yeah,
Because I list a lot of properties. I did
Yeah.
not know that.
yeah, and there's a lot of people that need to go to FHA because of debt to income ratio and because of credit. I
Yeah.
mean, especially in times like this of pending recession, I mean, there's a lot of people that are,
Yeah,
to get into a house, especially with these higher rates, I mean, they're maxing out very easily. I mean, so we've got buyers that have really good credit, but we put them in FHA because they need a 55% ratio.
so let me ask you a question based on that. I'm the buyer's agent. My client is an FHA. We're the second to write an offer on this property. I can tell by the archive that the property went under contract, fell out, went back active. We're going to bring an offer. Can I go to the listing agent and say, you had an offer? Was it an FHA? Is there an appraisal already on it?
Yeah, you can ask them. Hopefully they'll tell you, but
Yeah.
I mean, if not, we're gonna find out about it.
Okay.
I mean, the lender would find out about it, but when they try to order a case number, but
So,
hopefully-
okay, so then let's say that I write an offer. I'm sorry, I want to make sure this is clear.
Yeah.
Let's say I write an offer and I don't know if that first offer was FHA or not. You go to pull it and you're like, Kelly, this already has a case number on it. You'll know the appraised value.
we won't right away. We have to investigate because we have to
Okay.
call the prior lender of the deal that fell through and they have to release it to us.
Okay,
So
Okay.
it just, the system tells us, hey, there's a prior FHA case number and an appraisal was done. And
okay.
that's all we know. But I mean,
But you're
hopefully,
still gonna have another appraisal done?
no,
No,
we use
they
that
have to
prior
release that
FHA
appraisal to you
appraisal.
within yeah, okay, all right. So that could
Now on
work.
conventional, we don't do that. I mean, conventional, you
Right.
can't switch appraisals. There's no record. We wouldn't
Correct.
know.
Yeah, no, I know that.
Mhm.
So in a case like this, with that existing appraisal within the 120 days, that could work in the favor of my buyer, correct?
Yeah.
I'm just curious.
And hopefully a good listing agent, let's define the word there, that knows what they're doing, because some agents have no clue.
Yeah,
And they hopefully would know that and list it for that price. But, if it fell through, it's because their seller was stubborn
Got
and
it.
said, no, we're not accepting that.
Got
So it can get kind of quirky quickly.
Okay.
And then
perfect.
that's why you might see a comment on a listing that says conventional only. That
Yeah.
might be a reason. That's one of the reasons why.
Yeah.
It's
Got it.
either that or it's because it's a flip. And on FHA, you can't get under contract for 90 days on a
Sure.
flipped house.
Got it.
So whenever you see conventional only, you need to definitely dig and ask why.
Okay, good to know.
Because sometimes we can overcome that and then get the lender involved. Because sometimes the listing agent, y'all, they just are not educated. They
Yeah.
just don't know. They've only closed like 2 or 3 properties ever. I mean, nothing wrong with that. Everyone's got to start somewhere. I'm just saying, you don't know if they have a great broker like Kelly, or you don't know who's advising them behind the scenes. There's a lot of realtors. Y'all, this is hard stuff. Like, I
Yeah.
don't even begin to try to know what y'all have to, like, your education and all that. Like, I don't. And same thing, like, y'all cannot, your head would explode memorizing all these guidelines. So a listing agent just might not know.
Sure.
So let's get to the root of it. And that's where I come in, and and like, just tell me like, hey, Jen, call, let's talk to this listing agent and really get to the reason why. And is there really a problem with the lending, blah, 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 So unconventional, the one thing important to know, and this is why they need to get to a lender as soon as possible, they might meet the criteria on paper, like the written guidelines. But in reality, when we run everything through, all the loans have to be run through an automated system. And it does not always agree with, like, they may meet this criteria and the automated system says, no,
Yeah.
we don't like their credit. We don't like that. Like, it just flags it. And so it's really important to get them to a lender as quick as possible, because they may meet this criteria on paper, like I said, but in reality, it doesn't jive
Right.
with what we want. So super interesting. Now, I won't go too much into this because I'm going to send this to you. You can have the links, but there's even more down payment assistance than this. The best down payment assistance is the ones with the state, the top 2.
Okay. I was going to ask you about
FHA.
this. Yeah.
FHA mixed with down payment assistance. They can have up to a 55 debt to income ratio. Y'all, it is the best thing going, and a lot of people need it.
Yeah.
And the rates with down payment assistance right now are actually lower than regular. So even when clients don't need the money, I'm like, hey, do the down payment assistance. I mean, you got to pay it back anyway, but you were gonna pay that money anyway. So just take the lowest assistance possible, the 2%, and let's give it to you because your rate's cheaper.
Yeah.
They're like, okay, that's fine. So, that's where we want to talk to. I mean, thank God hopefully sellers aren't like conventional only, on that. That's where multiple offers was just so hard for FHA buyers, because FHA sometimes really is the best loan. So let us explain to you why. I explained to the listing agent, like, hey, this is, they've got really high credit, but this is why we're putting them on FHA. And really, y'all, the only difference on FHA is that appraisal thing we talked about. And they're a little bit more conscious about like rotted wood and termite damage. And in fact, it looks like there's a big old, infestation nest in there. I mean, big deal. Like, just get it taken care of, like they're just a little more fine-tuned on deferred maintenance. So, but other than that, those are the best. Like, you will get questions about, there's some national programs. What I can tell you is they have stricter guidelines, usually less debt to income ratio. You got to qualify and be under like 43%. There's a lot of hoops to jump through. Everyone's asking me, and they'll ask you, oh, Bank of America has this, there's some big Bank of America, like they don't even have to have credit, y'all. This is 2008 waiting to happen again. I'm a little bit scared, but there's a program to spur home ownership for people that basically don't qualify, to where basically they don't use their credit to qualify. They just use their rent history and like utility bills and stuff. But it's only in 5 cities right now. It's only in 5 cities, and Houston is not one of them. It's like Detroit. It's wherever there's a combination of more low to moderate income people.
Yeah.
So you might get some questions about that, but we are happy fielding those questions, just without going too granular in it. But there's all kinds of stuff out there. These are just some general rules about closing costs. There's closing costs, and then there's prepaid expenses. That's like insurance and escrow and that kind of thing. The thing I really want y'all to concentrate on is down at the bottom, the seller credit. We're going to start to see seller credits, seep back in. on a conventional loan, you may not know this, but with 10% down, 90% loan to value and lower, they can get 6% of the price in seller credit. This is important because we can use it to buy down the rate. I mean, we're going to start to see seller credits come out of the woodwork to make deals happen. Like if you're not seeing it already, it's coming.
Yeah.
And there's another program called the 2-1 buy down, where the seller credit can be used to buy down the client's payment for 2 years. It's basically like it saves clients hundreds of dollars a month in their payments, and it's subsidized by a seller credit. So I'm about to make a video about that one, but it's something that I like hardly in 27 years have ever had to sell because the rates have been so low. Like, who would do that?
Yeah.
That, like, so that, you know, these creative things can be used to buy the rate down or buy the payment down. And so we're going to start seeing, so if they put, well, they can't get a seller credit higher than what the closing costs are. I mean, that's, you know, if
Right.
6% of the price on a $400,000 house is 24,000. I mean, come on, y'all.
Yeah.
Like, what
Yeah.
closing costs are 24,000?
Yeah.
But they could be, they buy down a bunch of points.
Yep.
But so just, you know, work with the lenders on it and just kind of see what's available at the
Sure.
time. And the house does have to appraise. That's another thing. I mean, that's going to be tricky. This is just a timeline for you of, and we show people this like, hey, this is kind of like, hey, a 25 business day closing. These are the things from left to right that have to be done. And so when you want to close in less than 25 business days, which one of these are we going to shortcut? Which one of these are we going to make small, like instead of 2 days, make 1 or a half? Like all these things have to be done by every lender, pretty much in this order.
Right.
So if you want to, it's impossible to skip it's impossible to skip one of these boxes, but you could shorten it. So when people want to close super quick, I'm just like, hey, not a problem. Which one of these boxes are going to be shortened? Like, it's just as simple as that, you know, like, I mean, right now we're actually running really fast. Like, it kind of started around when Kelly bought, because things started to loosen up. I mean, I think we were ready with Kelly's loan in like 2 weeks, but obviously for
Yeah.
different reasons, they didn't. We were clear to close for like 2 weeks. It was the
Yeah.
longest clear to close.
I know,
ever.
it was so funny because Kenny would call me and go, I know I'm supposed to call you, but I don't really have anything to say because we're clear to close. And we've been clear to close for 2 weeks. I'm like, okay, well, how are you?
I know it's a nice problem to have, but we are ahead of schedule right now.
Yeah.
So many of these boxes are condensed. Like our underwriters are underwriting stuff in like half a day. Like,
That's great.
yeah, it's great. But anyway, this is just for good general knowledge for y'all to have. So like I said, I'm going to give y'all this slide deck. And then, you know, and I'll definitely field a couple questions, but do engage with me on social media. All my handles are Loan with Jen, you know, the YouTube one, Instagram, all that. And subscribe to my YouTube channel, because really, and you could just text me. I'll send you the scanning thing again there for my
And
thing.
just send me whatever, Jen, and I will get it out to our Texas group. Do you guys have any questions? We've got about 3 more minutes. Any questions for Jennifer?
I know,
That
sorry I
was-
talked so long.
That was
No, it's great.
fabulous.
Yeah. Sharon, do you have a question?
No, I just was going to say that was fabulous. You know, I've been in the business for 20 years and there were things like, well, I didn't know that.
Yeah. That's
So-
good. That's good. I know. I picked up a few nuggets. That's really good. Judith, do you have any questions? Are you still on with us?
I'm still on. I'd like to know, what are those cities with Bank of America? I heard Detroit.
Yeah,
What are the other 4?
Yeah, no, great. One of them is Dallas. One of them is Detroit. One of them is Atlanta. So, and I think one is Chicago. Like they're the places where there's more economically disadvantaged people. I was actually surprised that Dallas was one of them. I was like, really?
Yeah.
Surprised as well.
Dallas? But apparently it was. So it's kind of a pilot in those areas. But what happens is it's in the small print. And so clients see that and they're like, hey, what can I get that Bank of America program? And they don't read, they don't,
Yeah.
you know, it's like halfway through the article. They don't, you know. So if any of your clients, just a heads up, if anyone says they're using Bank of America for their loan, just
Run.
a regular loan, I would be cautious because Bank of America is inundated right now with so much more work than they ever bargained for because they're having to manually put together these files nationwide. Because you know, they don't, they have like 2 or 3 processing centers around the country. So all the loans funnel, right? So your client in Houston is being underwritten in Atlanta or Denver or whatever. And so
Yeah.
your regular experience, that's one of the issues with these national lenders. And sometimes, yeah, they have rates that are lower than everybody else. But the downside is they're not being underwritten until a few days before closing because the process is so clogged because these big banks are under enormous pressure by the government to make loans to low to moderate income people.
Yep. Yep.
And they're getting clogged up. And that's where people like me, you know, mortgage companies that are more boots on the ground. I mean, I can do a lot of other states, but mostly, I mean, I'm mostly Houston, right? But I help people in other parts of Texas. But, you know, that's what they're like, well, why wouldn't I just go to Wells or whatever? I'm like, hey, yeah, you definitely can. But usually I let them do that on their own. I'm like, yeah, go ahead, give them a call and see what they have to say. And they call me and they're like, yeah, I called them 4 days ago and they haven't called me back. And I'm like,
Yeah. Yeah.
that's
I
why.
steer my clients away from big bank. I like
Yeah.
a local lender, someone you can actually shake their hand, talk
Yep.
to them in person,
Yep,
get them on the
yep.
phone. I think that's important. So
Well, and the thing about the online calculator is a real valid argument as well. Like, hey, listen, like the Bank of America dude that you're talking to in New Jersey, he doesn't know Texas
right.
down payment assistance. Like he just
Yeah.
doesn't, you know,
Yeah.
and local taxes and all that. I mean, I know that in Katy, your average tax of 2.9 to 3.3, you know, like I just know that.
Yeah.
So anyway, it's all super interesting, but I will get y'all these slides. And then I wrote down all your names so that and because Kelly, I'll send you an email. Maybe you can get me their
Yeah.
email too.
Absolutely.
That'd be great.
Yeah, absolutely. So Jennifer, thank you so much. That was really good. Really, really
Yeah.
informative. You know, you send me whatever you've got. I'll get it all out. Love to have you back on, you know, in the next couple of months, talking about all the different subjects that you do.
Yeah,
you know.
we have, oh God, so many topics. I could just talk all day, but you know, mortgage is really, it's interesting, but it's super boring. I'm just big about giving y'all talking points.
Yeah.
Not guidelines. I kind of gave a little bit. I felt like today was kind of TMI, but you do need to know the
No, there were some good talking points in there. Yeah.
But those objections are huge. Like if you watch any video that I send you, that's the biggest one because that's what's keeping your buyers from properly pre-approving. And then, you know, y'all think, oh yeah, they're driving a nice car, they're a friend of so-and-so, and I know, you know, everything's gonna probably be fine. They live in this big house. Y'all, when they
Yeah.
open the kimono, I can just tell you, everybody has some kind of weird situation. They just do.
Yep.
And, you know, just don't leave it to chance. Because then at the end of the day, they end up blaming the people they're closest to, which is usually the realtor, like, hey,
Yeah.
let me go astray. So
Yep.
I would work that in my script. Like, listen, I'm super adamant about not letting you go the wrong way. Like, I'm your advocate. I'm your person.
Yep.
Will you just at least talk to the local lender? Just here's a list, you know, please, please, please. This is why I'm going to send you this video. So anyway, well, y'all have a bang up day and enjoy this weather.
Thank you. Yes, we will. Thank you so much, Jennifer. That was great. All right, you guys have a wonderful rest of your day. Yes,
You
everyone
got
go
it, guys.
outside today. Enjoy the
Thank
enjoy the
you.
lovelies. All right.
Got it.
Bye,
I'm gonna pop
guys.
off and let y'all
Au
talk. Okay.
revoir.
Sharon, I'll see you Friday.
Okay, honey.
Bye now.
Bye.
Bye.